Hello, ladies and gentlemen. Welcome to this live stream. I hope everybody is really doing well. So, well, first of all, welcome. And so before we look for the else and before we go to the educational content, let us just go to the total 2 chart, and then probably we go towards the other charts. What I see so far, the lower term time frame, as you can see here, we are most likely forming a diamond top, and this can be a fake out for the diamond top if we start flipping this again and just start moving up. So this can be a fake out as well, but most likely what I see is not a fake out, and the risk reward is nice for shorting. So most likely I think we're going to have the move on the downside. This is like A, B, 1 and 2, like this, 3, 4 and 5. So most likely we are doing A, B and C for something. So practically, the plan that I have it for what do you say, the total 2. I am watching this thing very closely. I think a retest of 0.5 Fibonacci level makes more sense. So basically a channel makes more sense like this. If you talk about the total 2, I think this makes more sense to me. But this can be the top as well. This can be easily a 1, 1, 2, 3, 4 and 5, and this is the 5 waves, and we are just doing some sort of a maybe start dumping from the down. So we might be the top out, and it's just going to reverse as well. So practically it's very hard to say at these levels, but just going to play the levels for now that I see. So hence for total 2, I think we are most likely till we are under this range highs. I am expecting it to just go down towards the levels of 474 and probably even to 470 billion. The bounce is going to happen from 473 to 470.999. that's the levels I expect a big bounce from, and we'll see. I mean, even if we reverse it, I think I'm planning along there for some of the opportunities I have. For example, Algo, Litecoin. Now let's talk about the total, guys. My plan for the total still is intact, no changes. A diagonal makes more sense to me, and yeah, I think the diagonal makes more sense. I don't have any other view for now, unless why I have to say that there may be a very complex correction that people might be ignoring it. I'm not sure. There is a likelihood that we might just be looking for a very complex structure right now. So what it means that this can be A, B, C, W, A, B, C, X, some sort of a the move that we are watching is A, so that is A, W, X, and then you get a Y wave like this, one more sweep down like this for the 711 billion, and then you get it like the C wave. So it's like this move on the upside that we previously saw. This partner leg is a double correction, a combo, and then we get another move on the upside, something like this. As you can see, the a very similar choppiness we might just see. I mean, if you really want to go for that choppy move, guys. So for that, I already mentioned in my chart that you have the invalidation levels for everything. So you have this green box, and then you have the 0.5 fib to the golden pocket zone. The 0.5 fib perfectly aligns with the support that we have, equilibrium support for this range highs and lows. That is the equilibrium, the blue dot line that you're watching, along with the 0.5 Fibonacci levels, along with the support that you have for the wave 1. So practically a week is fine, but I'm expecting more or less like just take the liquidity here. Once you take the liquidity, fill the fair value gap, retest the levels of 794, and then pump it back above for the one more push towards 1:1 extension for $853 billion. I think this is this is my primary scenario. My alternative bear case scenario is already I've explained that you already got this impulsive move over here. That is your first leg, and then you get like a partner leg here, and this is what we are doing right now, the partner leg, and then later on you get another impulsive move. So practically this is done. Now this is in the formation right now. If this count is invalid, so if this count is invalid, the diagonal is invalid, then this will play out, which means that we're just going to go down, sweep the lows one more time, and then pump it back up for something like this. I mean, this is going to be like a perfect 3 tap, 1, 2, 3, and boom. So it takes all the liquidity towards 852 billion. So this is how a likelihood that it might play out as well, and probably can be, people might be expecting for an inverse head and shoulder sort of thing, but it might just not give you inverse head and shoulder. It's just a fake shoulder, and then it dumps, sweep the lows, and then pumps towards 852.7 billion dollars. So that's going to be a very, very complex correction, guys, that I haven't seen in a while. Very, very, very complex if it just literally does it. So we have a very tight invalidation levels for everything. If I see that we are losing these levels on the total, I'm going to close all my longs, whatever I've given so far, and probably switch to the shorts. That makes more sense to me. Talking for the USD dominance, the wave 3 is most likely in 1, 2. This is wave 3, A, B, and C. A push up is likely towards 0.58 for 8.23 to 8.30%, and a dump from there is what I expect. Ideally, that it should give us. This makes more sense to me ideally. But yeah, this makes more sense. So I think this is how I see that the wedge, the diagonal forms for the USD dominance, but you never know actually, because the structure is not yet complete. The structure is not complete. Even if let's say this is 1, 2, I don't think this is 1 and we are doing 2, but whatever it is, I'm going to definitely long here for the 0.5 to 0.618 with the stops above these levels. So definitely I'm gonna long everything here with a tight stop loss, because I expect USD dominance to go down, which means that everything should pump and give us that pump, guys. So I think weekend is most likely going to give us that dip, and should give us a nice buying opportunity for the market. That's what I think. Now let's talk about a few of the alts. First of all, we discussed about the Bitcoin. My plan is fairly simple. One more dip into this blue box around 16,592 to 16,000. Maybe a retest is likely as well, but towards 16,472. But I do think that it's going to be most likely going to front run to 16,592 and 16,700. So that is the levels I'm expecting for Bitcoin to hold for the ABC, and after that one more push up towards to fill my short around 17,600, with the invalidation above 17,948, playing like a wave 4. So let's see how things plays out. And this is what I have from the hard term time frame. I think I've discussed already over the live stream yesterday in the Wall Street groups, so I'm not going to discuss it further. But prima facie, this is what I have for the counts perspective. This is like a 1, A, B, C, 2, and the move on the downside with the high volume is like a wave 3. And look at what we might literally do. This is the Coinbase chart. So you already got a dump, and you guys know about it. You got a dump, a nice shoulder formation with a very nice sell-off, and then you again get it a dump like this, one more dump for the falling wedge, and formation and forming like a very nice, and pump it up towards $26,000, inverse head and shoulder, pump it up towards $32,000, fill the whole fair value gap here. The whole gap is going to get filled at some point of time. It's gonna get filled. It's a matter of when. It's not a matter of if. There is no question of if. It's just a question of when. So everybody is waiting for this to fill, but most likely people are waiting for more and more downside. And what I think is we're just not going to go give them the downside move towards 12,000, 11,800, or maybe even $10,000. We're not going to go there straight away. But for now, what I say is this is maybe a very good opportunity and formation that we might be waiting for a long period of time. So hence, I'm just going to keep my spot bags that I have with an average of the profits that we have made with the trades on Bitcoin and other trades. I think the average has been very much fairly under 13,500. So I'm just going to keep having that along with the profits, and I'm just going to add more and more if we do go to the levels of 13,800. My best and most optimal levels, for what do you say, for Bitcoin is the swing levels that I have. The chart looks pretty much messy, but forget this chart. I have a very nice harmonic that most likely is going to excite everyone, and I think the harmonic that I have, the very nice shark formation can be a bad, but I think shark looks nice, or a bad look also looks great. So with that, having said that, 1414 to 1618 is the zone that most likely I'm targeting, which is around 14,500 to 1618 being 1618 being 12,822. So that is the levels probably you should definitely start buying spot bags. Don't be afraid, guys. But you know what I think is this is a very interesting diagonal, 1 2 3 4, and a bearish retest of 17,600. One more big down, make lower lows, and retest again, pump it back up, reclaim it, and just keep on pumping up towards 26,500 and come back down, reject ABC, a 3-step setup kind of a thing, maybe a possibility as well. I'm not denying the fact. But yeah, this is going to be a very nice buying opportunity, ladies and gentlemen. It's not gonna happen for the V-shape recovery as you guys are watching in the chart. Nothing is gonna happen for the V-shape. It's gonna take its own sweet time. But yes, I think it's as I mentioned, the pump is gonna come. It's just that it's a matter of when, but it's not a matter of if. So there is no question of if, it's just a matter of when. When it's gonna come, it's a question, either we're going to look at this move after one more wave down, 5 waves completion, diagonal completion, and then pump, or it's just going to probably pump from here itself, reclaim these levels, and start moving on the upside, practically forming a very interesting deviation on the range, and go to the equilibrium here, and 3-tap setup, and then boom. So this is also a possibility, bullish case that we can have probably. But I don't have a reason that why BTC should do it, because the 5 waves are not completed, and even if we are looking for a pump up, it means that this move is A, B, and C over here, clear A, B, C, which clearly indicates that this is A, this is B, and definitely irregular expanded flat. So C would not be going above the levels of 25,000, which clearly indicates that we should not be going up more than 22,993. And after that, from there, it's just going to do something like this. It's going to be very, very choppy. So you also have that scenario. I'm not discounting that bullish case that we just flip 17,600 and pumps up towards the levels of $22,000. So I'm not discounting that scenario as well. Now, ladies and gentlemen, let's move on to the ETH. For ETH, I think I'm looking to bid this, but most likely what I feel is we might be getting front run here. I'm not sure actually, but the way it looks like, I'm expecting this levels 1254 to sweep, and once you get the sweep, most likely I'm expecting it to have the move on the downside, like this towards previous week highs on 0.58 to 1232 levels, 1232 to 1213 levels, and from there a push up towards. Because the sweep is clearly pending. It needs to have that sweep, and once we get the sweep, we confirm that this is like a 5 waves completion. The wave 5 is in, and then you can go short here, because after that probably we're going to see a move on the downside towards the sweep of this lows that we are watching. So after that, you're going to see the sweep of this lows once you get the deviation, and then probably going down towards the $1,000. Ladies and gentlemen, I think this is how I see the market for ETH. I think I'm expecting one more push up from the levels of 1232 to 1213, with the stop loss being invalidation under 1178. It's a very good invalidation. If you just want to play a very tight stop loss, a very tight invalidation, then probably you should have your stop loss under 1193.3. that is a stop loss you should have. But this is my plan for ETH. Now let's move on to the algo. I think algo is doing, from the waveform perspective, what I see is you already got like A, B, C, B, wave 1, and this is like a wave 2 here, M pattern formation, and start pumping up like this, for the wave 3, reclaim it and go towards 28 cents. That's how I see a 5 waves completion for the algo. And maybe after that, it just come back down like this. My stop loss is the invalidation levels, and that's what I'm using. Let's go to the Matic. My plan for the Matic is, let's give us an impulsive move for Matic towards $1 to 1.03, maybe even 1.04, with an invalidation above 1.1. The take profit targets would be for roughly around 16 cents, and 20 cents to 16 cents is what I'm eyeing for the Matic. It's a very clean bear flag for now, unless this bear flag invalidates. But for now, this is the bear flag, guys, and I have to stick with this bear flag. I don't have, because you look at the thrust. The first thrust happened with the high volume. Over here, the second thrust making higher highs happened with the low volume, clean bear diversion, and that clearly indicates that this move that we are watching right now is a clean corrective move and not an impulsive move, guys. A clean sign, clean indication. A, B, and C, or maybe W, X, Y. A, B, C, W. Sorry, X. So that something like this, and then probably going to like something like this. Wave 1, 2, 3, 4, and 5. So that's how we can have Matic, and Matic probably going to be having a big bottom formation on the bottom time from Link, guys. On the other hand, for coming to a very big support, something you should be definitely minding it. It's a big level of support, guys. It's coming here. If you do hold the levels of 7.2 to 7.23 levels, I expect Link to have one more push up, sweep the liquidity, forming like over here 1, 2, 3, 4, and 5. So that's going to give you a very interesting 5 waves here, ladies and gentlemen. But lose the levels of 7.2. Once the 7.2 levels lost, and turn, you can short it with a tight stop loss, and the target would be the equilibrium to 6.65. So Link is very clear to me, guys. AVEX, I'm long on AVEX. Even Alice is long. I think it's a very nice levels. We are holding these levels in a very pretty much clean chart that we have here. I think the first target should be the take profits around 14, but my target for AVEX is 15.9. That's what I'm eyeing. Why? Because we took the liquidity here, so you got the deviation. So the first target is to sweep the highs. You also have the OB this levels, but then you also have a big fair value gap. So you go inside this fair value gap, reject, do ABC, come back down, and impulsive move towards this. I think most likely I see this is 1, 2, 1, 2, 3, 4, 5, again 4, and then 5. So that's how I see AVEX might be running it. The stop loss and invalidation is very tight. Your stop loss and invalidation levels should be under this wick that we have around 12.788. That is where your stop loss should be, and I have my stop loss there. If it wicks, it wicks, but this is the very nice risk reward play that I have for AVEX. Let's talk about mask. I'm long on mask, guys, and it's really looking great. I'm long from 3.66. I think mask is doing most likely wave 4, so it's just going to do something like this, and one more push up for 4.7. That's where the wave 3 would be, and once you get this move with the wave 3, come back down for the wave 4, and one final push towards 5.2. That's where we short mask, but most likely mask is not done is what I see, because the wave 3 and wave 5 is pending, and I do see that mask looks great. Actually, the lips are for buying for mask. The invalidation level is 3.4. That's your invalidation levels, and the take profit targets for mask would be 4.6, and later it would be 5.2. I mean, that should be a target for. That's where I'm going to short it. I'm going to short this shitcoin towards the levels of $1.9 with the invalidation above 5.4. Risk reward is amazing. This is my invalidation levels, the 5.4. Anything above this is my invalidation levels. So I'm going to play this high risk reward play on the mask. Litecoin, my plan is pretty much simple. I'm expecting a dip down towards 72.5 to 72.6. Can even 72.7 to 73.6. Can even go to 71.6, but that's fine. Your invalidation levels is under 71.6. You can have a 71.5 stop loss, because it breaks it, then it's just going to literally reverse and forms like a big Burj Al Arab kind of a pattern, that it pumps like this, and Burj Al Arab retraces the whole move and even sweep the lows, practically go towards the $40. And this is how it will go. So your stop loss is very cool levels for an invalidation, so you should definitely have your stop loss near, guys. I don't have anything for near at the moment, but that's all what I have. Now let's go for the these are the charts that I have for CHR. I've already posted in my corner, guys. Just check it out. It's doing a very amazing thing on the Hartham time frame. Just want to give you a heads up, but if you just want to check it one more time, I can show you for the guys who are not in Walsh Wealth group. For those guys, this CHR definitely is worth watching it. I'm not sure if the wave 3 is in, but what I see is the previous impulsive move was clearly the 5 waves, 1, 2, 3, 4, 5, and that is your 5 waves that we are watching, ladies and gentlemen. and that is like the cycle one completes, and now we are in the bigger correction for the cycle two. We already did like 1 2 3 1 2 3 1 2 and 3. So practically I do think that this is more likely WXY rather than 1 2 3 4 5. So the yellow count makes more sense because we already swept wave 4 lows. This is your wave 4 lows, which is already being taken care of. So the further bullish confirmation, what you want to see is we start sweeping the or reclaiming the levels of 12.97. We're practically on 13 cents. But once you get this reclamation like here, you're gonna expect a impulsive move towards 19.19 and come back down and then pump it up towards 26.4, making it the biggest impulsive move towards 53 cents. So practically that is going to be, the move is going to be wave A, wave B, and then further dump towards 0.886. That's going to be your bear market bottom for around 3 cents. I mean, that's what I think for CHR. But then if this is WXY, definitely I think the big impulsive move is on the way, guys. We just don't know that how much time it is going to take for this kind of a big impulsive move, guys. RSR, you already know, we have discussed a lot about it with John, with Woods yesterday. You also know about Mask, I've discussed about it. You also know the correlation between SPX, I've discussed about it. Gold, we discussed. I think Euro USD we discussed, and dollar index also we have discussed. Now what is, I want to also show you one more thing over here. I was having intention to make you learn more as to how you can probably look for what is Elliott wave theory and how you should be I just want to give you that kind of a feel good factor about Elliott wave and how you should use it, and what are the pros and cons of Elliott waves, and what you should be using it to add extra confluence to your trades. If you're just not into Elliott wave. So remember one thing, guys. Many people think that, okay, Elliott wave theory is very easy. Yeah, it's easy. But when it comes to charting, guys, it's like, I don't know about what other fields, but it's like, it's a whole, Pandora box. So for me, I might, my mind might be seeing something else. For example, a same count, I might be seeing it as 1 2 3 4 5, but the similar count, a different person or an expert would be seeing that count as a WXY move, maybe a corrective move. So it all depends, and nobody can say that this person is right or wrong until the count is going to play out. So the Elliott wave theory is something that you eventually will know, but when you are drawing the count, you won't be able to know that if this is correct or wrong or incorrect. So you just have to play your cards. You need to start adding more and more confluence. You should have your invalidation levels. That what are the invalidation for this count? Of course, every count has the invalidation levels. So what are the invalidation? Once it invalidates, you move on to something else. Basically, that is something else. So don't stick to something. You have the biasness. Keep on changing it as and when you see that your invalidation levels are hit. Recount everything, make sure it aligns with the fibs, and you also have a lot of confluence, and then probably you should definitely go for it. So what is Elliott wave theory? So Elliott wave, the Professor Elliott, he was very keen with the waves theory. Actually, he was like, so whenever, if you look at the sea, every tides or whatever you can say comes with under the waves. The first tide is going to be like a the first tide or the first wave that comes is going to be like a a sample that what is coming next, and after that the big waves come, like when earthquake comes. The first shock will be like a small one, but there will be a big aftershock, there will be a big shock, and then there will be a small aftershocks. A similar kind of, I know there is no exact correlation, but what I'm trying to understand is whenever the waves comes, there will be first wave, and after that there will be a big waves. And later it just keeps on, slowing down, and then it is done, khalas. And that's how the waves are. So practically the waves, denotes the psychological factor of a trader actually. And what are the psychological factor? There are traders and there are investors who don't have patience. So what they do is people buy the top, and when they sell, they capitulate themselves, and the price starts reversing and go back up. And the people, and those are the same traders, they're going to buy here. The breakout traders, they're going to come in, they're going to buy, and just going to keep on pumping. Once they are out, and people are going to trap, it come back down again and then pump. So something like this, the wave theory is. You might be, every person will tell you a different theory. They might say that I am wrong, other might say that he's right. You might have a different theory, because it's an understanding of what people understand. I have a clear understanding of the concept. Basically, the focus is on concept and not the definition of a theory. It's just that you should understand what the concept is. Once you have grasped the concept, definitely I think it will be very easy for you guys to start putting it into the practice. It took me roughly around 5.5 years now that I'm practicing Elliott wave theory, but still I can say that I'm a student, guys. I'm not an expert that whatever I say is going to be true. No, I cannot say that. Even if I have an experience of like 70 years, I think I won't be able to confidently say that. Of course I can say that confidently that this is the account that I have based on the experience, but I cannot confidently say that that this is going to play out. It's always always, and all the counts you should have invalidation levels, and that's why the stop loss is must. So we are going to start with a very basic thing. These are known as the impulsive move. Wave 1, as you can see in front of the screen, you have wave 1, wave 2, wave 3, wave 4, and wave 5. Remember, wave 1 always have another 5 waves, a small 5 waves. Wave 2 is going to be a corrective move. Wave 4 is going to be corrective move. Wave 3 is going to be impulsive move, like again 5 waves. And wave 5, the final wave 5, again is going to have 5 waves. And it just keeps on going on and on and on. So every wave 1 has 5 waves. Every wave 2 is a corrective wave. Every wave 3 again is an impulsive move. Wave 3, you can only identify wave 3 with a volume. Wave 3 is going to come with a big volume. The volume is going to be so high and so big. So the wave 1 volume is going to be make you feel like it's very, very tiny. And the wave 5 volume would be very, very low with respect to wave 3. So with respect to wave 3, wave 5 volume would be very low, forming a bear diversion. And also there will be, from the harmonic perspective, you will have bearish crab, or you might also have bearish bat. Not bearish bat, but bearish crab makes more sense. Maybe even shark as well. But this is how the wave 5 aligns and gives you the confirmation that the top is in. Now the impulsive waves, that is 1, 3, and 5, always comes in 5 waves, 1, 2, 3, 4, 5. Whereas the corrective wave 2 and 4. Now there can be variant of the correction. The correction variant can be in the form of, first of all, very basic correction is A, B, and C. It's a very basic correction. A, B, C. A can be 5 waves, guys. B can also be 5 waves, and C, remember one thing, always remember, in a corrective move, C will always be 5 waves. It can never be ABC, it can never be WXY. No, always 5 waves. A can be 5 waves. Most likely what I've experienced that B most likely is ABC, or zigzag, or a double correction, or a triple correction. It can be combo, anything. B is always fuckery. Remember, A is very simple, 5 waves or ABC. B is a fuckery wave. That's where people get trapped. The buyers or sellers, whosoever gets trapped, the stop hunts happens. That's where the bots make lot of money for exchanges, and that's where people get trapped. and C is going to be the point where whosoever got trapped at the B wave, they're going to capitulate at the C wave, because C is always 5 waves, and in 5 waves, wave 3 is going to be big capitulation, always with a high volume. So practically this is going to be a basic correction A, B and C. Remember, A can be 5 waves or A, B, C. B, most likely, majority of the times you will see it's going to be either ABC or double correction, triple combo, or it can be, a combo. It can be a WX and a triangle, something like that. B can be a triangle, blah, blah, shit. And remember, C is always 5 waves. So whenever you're counting the waves, and if you don't see the 5 and any correction end with the 5 waves, which means that correction is not the correction, and that is not the bottom. So whatever the pump you want, you get it, you short it, and you further short it down till you don't see the 5 waves correction end with the 5 waves. So that is the first correction, A, B and C. The second correction, double combo, which is another, something like this, but this is going to be W, X and Y. Now, a very basic and a simple theory for the WXY is 3-3-3. It's a very basic 3-3-3 formation. A, B, C, A, B, C, A, B, C. That's a 3-3-3 formation. But in some cases, it also goes for 3, 5, and 3. That's how the combo goes as well. Now, this is a double correction. There is also a triple correction where you get one more leg up and then further down. That is going to be W, X, Y, X, Z. Also happens in majority of this kind of corrections happens in a very corrective pattern and not happens in an impulsive move. So this kind of pattern happens in a corrective move, actually, W, X, Y, X, Z and W, X, Y most likely. And this is based on my experience. I mean, there's no theory that it's like that, but what I've seen, that these kind of WXY and WXYXZ happens in a corrective pattern and not in an impulsive move. So which means that this 5 waves is like a start of an impulse, then you will rarely see this WXY or WXYXZ. Always it's going to be ABC and pump or ABC and pump. But we are already in the bear trend and it's pumping like 5 waves here, then there will be choppiness, WXYXZ, and a lot of choppiness is going to happen sideways and blah blah shit. So lot of things you might, for many people it might be going above your head that what the fuck is he talking about. But guys, once you start reading the material from the you get a lot of free material on Eloit Wave on the website, or probably from the Google. If you would like to learn something about Eloit Wave, you can go check out Eloit Wave International. The link on the Twitter is mentioned because I am a partner with Eloit Wave International. You can just check it. There is some free courses available as well, but you need to just spend and invest your time. You need to give that time, 10 to 12 hours you have to give. That's something you have to give, guys, nothing else. So that's where you can learn and start practicing it. So now this is like a correction. The wave 4 correction is most likely, as we have seen, would be a kind of a bull flag. That's the first wave of correction for the wave 4. The second correction, we can see a bullish pennant. The third correction, what you can something like this, a bullish pennant, something like this. And then you might also see various types of triangle, contracting triangle, and something like this. And you will see symmetrical triangle. You will see ascending triangle formation for the wave 4. Ascending triangle is something like this with a 3 tap like this, and then a breakout. Wave 5, a fake out, trap everyone, and then dump. So almost, because ascending triangle normally happens at the wave 4. Actually, it never happens at the wave 2. Remember, wave 4 is the ascending triangle, and some sorts of a other patterns might happen on the wave 4 is going to be a bearish crab, or it's going to be bearish shark, or it's going to be most likely it's a bearish crab. According to me, I think butterfly is out of the question, but yeah, bearish crab makes more sense. And these are a few of the patterns that I can recollect right now on the stream, because I don't have any sort of a material, because everything is in my mind right now. And this is how you can identify wave 4 actually. And wave 5, remember, it's not going to be the big wave 5 unless it is an extended wave 5. If wave 3 is too big, wave 5 is going to be small. If wave 3 is smaller in size, wave 5 will be big. So something like this happens normally. And similarly, if wave 2, this wave 2 is shallow in the sense it bounces from 0.5 fib or 0.382 fib. That's a shallow wave 2, which means the move is very, very bullish, very shallow. Wave 4 is going to be a deepest wave 4. It can go retracement towards the golden pocket zone. So the wave 4 then would be a very deepest wave 4, and it might just go for a WXY or WXYXZ, like a complex correction, instead of forming like a bull flag or a pennant or a triangle, whatever. Similarly, if wave 2 is the deepest correction, it goes perfectly towards 786 to 886, then your wave 4 is going to be very, very shallow. Max it goes towards 0.382 to 0.236 and bounce for the new high. So that's what you have for the wave 4. I mean, this is just a lot of concepts, diagonal concepts. You have leading diagonal, ending diagonal, and lot of things are there, guys, which we if I just keep on discussing it, it's gonna take hours and hours. But this is the start, where you just start something, start getting interest in this theory and start something, guys. I know you might feel that this is shit, it don't suit with my style. But I think this bear market have taught us, not only one thing, but a lot of things, that don't rely on one trading mechanism. You should keep on exploring. And, even if it suits the best price action for like scalping. But remember, the wealth is made with swings. You can get rich with the scalps, but wealth, you will be wealthy if you start playing swings. Scalp you can make like 2k, 1k, maybe even 500, maybe even 5k. Max you can go for like 20 to 50k. Wealth, we are talking about millions and millions. That's how the wealth is made. So I think you should start learning Eloite Wave, and that is going to be your focus for you. This is going to give you a lot of insights and idea as to how you should manage your portfolio from spot perspective as well. So if you really are if you really have a big cap and you would like to manage your own portfolio, this theory is going to help you a lot. Now this is like a basic theory. Now what all things you should add? For extra added confirmation, you should add EMAs and MA. I use mostly 21, 300, 50, 100 and 200. That is the standard one. But I also use 800 EMA, and because that gives you a very interesting idea on the long what is happening with the hard term time frame, or the longest period actually. Also you can use fibs. Fibs are the most important thing. I'm not going to talk much about fibs right now, it's a separate topic. You can use or add more confidence with respect to harmonics. These are the cheat sheet that I have for the harmonics. Many of you guys know it. I've already uploaded this cheat sheet in my corner in the Walsh Wealth group, and also you can find similar kind of things on the Google. Just go and download from there as well. You can do it. These are not the only harmonics we have. You have bullish 5, you have bearish 5, you will have some sort of other harmonics as well that I might not be aware of. So but these are the common and the basic harmonics pattern that you will most likely find it across the board, and very high probable harmonic that's going to play out. Remember, harmonics are not 100% accurate. The probability of it playing out is 60%, which means that out of 10 trades you take with from just by using harmonics, your 6 trades are going to end up in profits and 4 are going to end up in loss. So practically, if your win ratio is just going to be around 60%, just if you are just using harmonic, you don't use anything else, only harmonic, but still 60% win rate is good. If you're managing your risk, I think that is going to make you very, very nice gains, even if it's a 60%. Now let's talk about, you can also put use from the price action perspective. You can use extra added confluence like value area highs or lows. You can add POC support, you can add previous week levels, you can add Monday lows, Monday support, you can add key SR on the daily, weekly, monthly. You can use naked POC. Naked POC, you'll be able to find it from the XO chart. Lot of confluence you can put in. That way you have a perfect setup, and once you have a parameter that everything it fits, aligns, you go and rock it. You just give a trade and just write it. This is how you should play, guys. That's a small talk about the Eloit wave and what extra confluences you should put it while trading, guys. If you definitely like it and learn from this, do trade on Bybit, guys. My referral link is mentioned in my Twitter profile as well as in the YouTube description. Do trade it. Go create an account and deposit the funds, start trading it. Also it's a weekend, guys. Take a break and maybe enjoy with your fam, because next week is going to be very interesting. SPX is going to top out, dollar index is going to bottom out, which means the SPX is going to reverse. Bitcoin and Ethereum, I'm expecting it to have one more push, and then that should give us our shots, trigger shot, and everything starts dumping together. So I think next week is going to be very, very interesting, guys. Q1 2023 would be very, very interesting if my plan for the Bitcoin inverse head and shoulder plays out, meaning that Q1 2023 should give us $26,000 retest, and that should be very, very interesting, ladies and gentlemen. That's all. Have a nice night, and thank you so much for your support. Bye bye. See ya.